Hello everyone, this is Martin. Welcome back to another weekly video. This time we're looking at the trading opportunities for the upcoming week from August the 1st to the 5th. That's Monday to Friday, and we're going to start off by taking a look at the Euro USD, which I've got on the chart right now. This is the weekly chart. Now, the great thing about this week is that a lot of the currency pairs are correlating as they often do. And what I mean by correlating, some of the major pairs are going in the same direction, other currency pairs, as expected, are going the opposite direction. So, going in one direction, mainly what I feel will be upside movement are from the Euro USD, the British Pound. Well, this is the only pair that's really not going anywhere. It's still going sideways, but Euro USD, Audi USD, New Zealand USD all seem to be heading higher, and heading the opposite direction seem to be the US CAD, US Swiss franc, and the US JPY Japanese yen. So while we're showing you these charts and analyzing them for trading opportunities, just keep that in mind, okay? And that's called correlation. Okay, so starting with the Euro USD weekly, the first thing I'm going to do is just zoom in. I want you to see something really important. Here is a huge engulfing candle. Now, this is the weekly chart, but you see, price basically was being supported here in this support zone. Buyers were not allowing price to come down below this area. So, price had been going sideways for about 3 days. And all of a sudden, we have this one huge weekly bullish engulfing candle, which also closes above the 50 simple moving average here. So this is a very important clue, giving me the indication that trend most likely will go higher to at least this area right here. Okay, and now I'm going to switch to the daily. And on the daily, you can see the same thing. Friday's close was with a huge bullish candle. Okay, you can see here. This is what happened since the previous Friday with the trading. So coming from a low here, again, buyers pushing price higher, not allowing price to go down lower. Then this support area, price broke up higher, 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 and finally all the way above the 50 moving average. So I expect price to go higher, and that is my general trend direction. However, if looking for an entry, um, it's possible you can take an entry right here, but your stop loss would be way down here. So it'd be a pretty big stop loss because that was a pretty good move on Friday. However, I'm going to switch to the H4 chart. You can see that right here. Okay, and on this chart, we could possibly look for a retrace back to this green zone. Now, I've drawn in this green area because this is I'm waiting for price to retrace back here, and this is called the buy zone. So again, this is what I'm looking for. I'm looking for price to come down and then go back up. Okay, so taking a look for some sort of bounce in this area. Okay, and that's what I mean by the buy zone right here. So it could be a good opportunity if you switch down to the 4-hour charts, especially beginning on Sunday evening or on Monday. See if price comes down and goes back up. Also note right here, uh, just this, note the 200 moving average. So price most likely is going to come down here. The 200 moving average acts as a magnet, okay? And then we can just watch for price to break higher, okay? So the next pair is I just want to show you really quickly. Okay, right here, this is the Euro USD LEOD chart. Again, you can see we had a break above the upper yellow line. This is really good news. Also, closed above the blue, which I've drawn that in for your benefit, the 50. So you can see then price could come down a little bit lower to retest the 50, but it looks like price is going to go higher to at least this longer term trend line. So again, the LEOD chart shows you a pretty clear idea what's going on. The MACD is almost at 0, but the blue RSI line is now just above the 55, or very close to it. So that's the LEOD. Now we move to the British Pound Weekly. And here, weekly, you can see price just going sideways. It's kind of contained within this triangle. Um, and to take a better look at what's going on, you can see price really has kind of gone just sideways here. The candles are relatively small after these volatile candles. You can see the previous candles to your left in this area. They're much larger. The range, the daily range of these candles is much larger. Here we're getting to some very small daily ranges, which means that there's a pretty good fight going on between the buyers and sellers. And again, what we want to do is we want to take a sell below 130.40. See this area right here? So we either want to take a sell below 130.40, which is right around here, okay, below these lows, and or a buy above 133.20, 133.20, which is right about here. So a break to either side will probably move price by quite a bit, but we're just waiting for that to happen. Again, on the there's not much showing on the LEOD. It shows you the same thing. So now we jump to the Australian USD. And remember I said correlating pairs? Euro USD seem to be going higher. The Australian USD also seems to be going higher. This is the weekly chart. You can see we had kind of a really good bullish candle last week, okay? And it seems to be trending higher. So now let's go down to the daily chart. Again, because we had a huge movement up, I mean, it's possible that price would continue just going higher with the Sunday, Monday open. However, um, the better idea is to wait for a retrace, and by that, let's go to the H4 chart. So if you want the best entry, and we are anticipating a price higher, what we want to do then wait for a retrace, okay, and wait for price to come into this buy zone. So somewhere in here, then looking for a bounce off like out of the buy zone. So we're looking for price to come down, okay, and then we're looking for price to break. Okay, and let's do it this way. Okay, so we're looking for price to come down into the buy zone. We're going to be drawing a trend line, counter trend line down, waiting for price to come and break above the trend line before we can get in, okay? And once price does that, most likely it'll come to at least here, but it'll clear the high, the previous swing high here, and come all the way back to this area. So it looks like there's still good room for movement. Could be anywhere 80, 90, 100 pips or more. Okay, so that's what we're looking for with the Australian dollar. The better entry would be on the H4 charts, but you can certainly get in on the daily charts. Let me just remove this for a second. And again, we're just waiting for price to come down into this buy zone, right? Just for the fact that price went up really, really, really high. See, take a look to your swing left. See, price went up really high. I mean, this movement was like 114 pips, but then the next day came right back down. However, take a look at the moving averages here again. Okay, you can see the 50. They're almost in the correct order, except for the 100 here, but the 50, the 8, and the 21. I expect price to come down a bit or go sideways a bit and then shoot higher again. Okay, so now let's take a look at the New Zealand USD weekly. Here you can see a definite trending channel. We're in a bullish trending channel. And again, on Friday, we had a huge, I'm sorry, last week we had a huge bullish engulfing candle. So that's always really important to look like. When you do see a bullish engulfing candle, especially on a weekly chart, it means that price most likely will go higher. And weekly here, you can see price will most likely come up to the top trend line here. Okay, so now we're going to switch down to the daily chart to give us more of a clarity. Okay, and again, I've drawn in the resistance. So resistance is sitting here at the swing high. Price has still got a ways to go. Once price goes higher, and that's another 110 pips. However, again, we're waiting for price to come down to a buy zone. Okay, now notice that the MACD is just at the take a look. It's just above the zero. That's good news, indicating buying pressure to the upside. However, again, we had a huge bullish candle on the Friday. This is the Friday's close, and I would be waiting for a retracement. So for that, let me just go down to the H4 chart. And this is for your benefit. I mean, even if you're an end of day trader, which means you're going to wait till the evening to take a trade, one trade, looking for one good setup, then I would wait for price to come back down here. End of day either on the daily chart, but you can always switch your charts to the H4 chart, which this is. So that means every 4 hours you're waiting for a candle to close, which means you can still do a lot of stuff in the house. You can tend to household chores, look after your family, play with your kids, do some shopping, whatever. But it may take 1, 2, 3 H4 candles to come down, maybe just 1 or 2. But again, you can look for a price to come down and then look for a bounce. So what we're looking for is looking for price here, then waiting for a bounce higher. Okay, and again, what you want to do is I'm going to draw on a trend line again. Oh, I'm sorry. Again, once price comes down, you're going to be drawing a trend line. Okay, and I'm still doing something wrong here. Hang on for a second. I've got to close that little app. Okay, so when price coming down, you were looking for a breakout of the trend line, and then you're good to go to the upside. Okay. And on this one, so, okay, yeah, that's what I want to just mention. Just wait for price to come back down to the buy zone right over there. Okay. Now, next we've got the USCAD. And again, when it comes to correlations, this is an opposite correlation. So usually the first few, the first major pairs I discussed are going one way. And in this case, it's the Euro USD, the Australian USD, and the New Zealand USD all seem to be heading higher. The opposite direction seem to be the US CAD, US Swiss franc, and the US JP. So let's take a look at the US CAD. Seems to be sort of on a weekly chart here. Not much is happening, kind of in a sideways mode, but my bias is to the downside. So even on the weekly chart, it's not that clear. My bias is to the downside. Let's take a look. This may give us more clarity, so I'm going to switch to the daily chart. And there you go. You can see last week price went, okay, this is the daily chart, so I forgot to do this. Okay, this vertical line depicts the end of the end of the previous Friday. So we had one huge up day, then price went sideways, bounced down off of resistance, and finally take a look at this. Price dropped down quite a bit here, just below the 21. So I believe price is going to come down lower to at least this area here. You can see we have a confluence. We have the 50 simple moving average, that's the blue line. We've got the longer term trend line, okay? And I've got this as a buy zone because basically when price is in a channel or a pennant, this is called a, kind of a bullish pennant, up, down, up, down, up, down. I think price is going to come down a little bit further. Here, I kind of almost anticipate price coming down and maybe bouncing higher again off the 50 and off of this area. So looking for either a buy limit order here or looking for evidence that price is going to go higher once again. And this is what you can do. I'm going to draw in a trend line. Okay, you can see that right here. So when price is going sideways here, we're looking for price to come down a little bit lower, bounce off this area, bounce, and this is the buy zone here, and look for price to break out above this trend line where price then may again once again head higher. So that would be my game plan for this pair. Okay, and again on the H4 chart you can see I think price is still going to come down further. Take a look at the 200 moving average. It's like a magnet. It most likely will bring price down further. I mean, if price breaks this area right here, then price may come back down all the way to, see the previous swing low here? So I'll draw in, I'll draw that in, and you can see price could come all the way down to this area here. Okay, if price breaks the low of this the 200 and the trend line. So price may come back down, may come back up to retest, and then back down further. Right now the MACD is just below zero. Remember, this is the H4 chart. The daily chart, the MACD is still above zero, meaning that price basically was in an uptrend. However, the uptrend, you can see with the histo bars, the uptrend has weakened significantly, and that's why my bias is to the downside. Okay, let's take a look at the LEOD chart. That gives us some clarity as well. You can see I think price is still going to come down a little bit further, just as it did here with the previous swing low, another previous swing low. So 1, 2, most likely the third previous low before it bounces higher again. So you can see that it's just coming down, up, down, up, down, up, down, up. So, you know, it's great for an intraday trader, but if you're a positional trader, like you're an end-of-day trader, it may be a little bit more difficult. Right now, take a look below. The blue line is below the yellow, but not quite below the 45. So for price to take a sell trade to the downside, you would have to first wait for price to break this trend line, and then and wait for this price to break below the yellow line and the 50 right there. The yellow line especially, and the trend line before you can even consider taking a sell trade. Okay, right now it's kind of just wait and see. And now we move to the USD Swiss franc. Again, to me this is indicating that price is trending sideways. Also, my bias is to the low, going down, so sideways to lower. You can see the weekly candle here was a huge bearish engulfing candle again, indicating that price is going to come down a little bit lower. Now let's switch to the daily. Okay, you can see 1, 2, 3 huge daily candles to the downside, which indicates basically that the U.S. pair over the last couple of days last week was getting weaker again. There was strength in some of the other major currencies. So just keep that in mind for this coming week. Whether the U.S. Currency will continue to show weakness and some other currencies showing strength. So we'll talk just briefly about that in just near the end of this video. But take a look here. I believe price is going to come down further. However, again, wait for a retrace. And this time, again, we are looking at price to come back up to this sell zone, and then waiting for clues or break of a trend line to the downside. Okay, so that's what we're looking here. Again, this red area shows the selling area. Again, you can look at the approximate price on the right hand side, but that's what I'm looking for. Price may come back and retest the 50, somewhere in between here as well, and then go down. So the best entry obviously would be looking at the 4-hour chart. You can see price come down way too far. There's a bit of a pin bar. Price may retrace up higher. Again, to see if price is going to retrace, you wait for one bullish candle. If you see one bullish candle, then I would probably get in right away at the open of the next candle. You can go down to lower time frames if you're an intraday trader as well. Just to give you an idea, this is the H4 chart. Okay, let's take a look at the H1. You can see how price is now stalling. It's going sideways. You need to look for one good bullish candle higher to break this area of sideways action over here. And again, on the 15-minute, you can see we're still going sideways. So you're looking for price to come up into this area, but basically to break above the 50 for price to go all the way up to here. Okay, so that's for the intraday trader, and intraday means you are going to draw a trend line from a previous swing high down here. Okay, so you're looking for price to break higher, but I would kind of wait for price to go higher, down, and then maybe up again, right? And then you're looking for you're looking to draw. I'm gonna do that. Okay, there you go. So let's say, okay, this is what you're looking for. Let's say price goes up, comes back down. Now you've made another peak. You've got a peak over here waiting for price to break higher. Okay, so that's for the intraday trader. Now let's take a look at the next chart. Oh, I want to quickly show you the LEOD. Okay, you can see why I think you should wait for price to retrace, because with this huge candle, this daily candle on the USD Swiss franc, price actually broke previous support. You can see that right here to the left, but came right back up. So the buyers are holding price right now. Buyers are holding price, preventing price from going down further. I mean, certainly there's selling strength that did come in, but buyers for now in the short term are holding price, and most likely will push price a little bit higher to my sell zone, my red sell zone, and then you can look for price to come back down again. Okay, once price comes back down again below this area, we have a long way to go and some pretty good pips in the making there. Okay, and now we get to the last pair, which is the US Japanese. Well, this one's an easy one to look at because we're in a long-term bearish channel to the downside. You can see price never really goes above this upper trend line. So we are trending lower, and for more clarity, let's go to the daily. Okay, here again, you can see we had this huge, massive sell-off on Friday with the Friday's close. So again, because this candle was pretty large to the downside, I kind of, if you're going to take a sell trade, you would want to take a sell trade. Here's the problem with the breakout. If you want to take a sell trade right now, price may just go down a wee bit and then come right back up again, right? So if anything, you want to sell below 101.80, 101.80, and that would be, it's around 17 pips or so below the current low. Okay, so you could do that, but the better thing is, and this is the daily chart, wait for price to retrace back to this area for better entry. Let's take a look at the H4. So you see all these down candles. Yeah, price may continue going down. Okay, but I would say it's probably more prudent waiting for a retracement for price to come back up to to the red sell zone like this, and then waiting for evidence or price to continue going down further. Okay, so that's what I see on that. And again, the LEOD chart shows the same thing. We had a huge, massive candle, but again, I would not just get in right now. I'd wait for retracement back down to the south side. The problem is, if you get in right now, your stop loss would have to be right. Remember, with the LEOD strategy, on the other side of the yellow line. So in this case, just above the yellow. And here you go. You're looking at a stop loss of 407 pips. It just doesn't make sense. So makes sense if you get in at a smaller time frame, but wait for the retracement, okay? And that would be my best suggestion. Now, strong pairs, weak pairs, or strong currencies, I should say. Japanese pair, I'm sorry, the Japanese currency really seems to be getting stronger. New Zealand is getting stronger. The weaker pairs are seen to be the USD, possibly the CAD. Sideways is still really the British pound. So it's up to you for looking at the cross pairs, but take a good look at the Japanese yen cross pairs for good entry opportunities. I think you're going to find some good opportunities. There may be retracements for the first few days next week. Just wait, be patient, and then look for further selling, further evidence once the retracement is finished. But the other thing I want to show you really quickly is two other things that you can possibly trade, which would seem to provide really good opportunities, are the commodities, silver and gold. They've been on a tear lately. They're doing well. These both seem, the price of gold and silver seem to be doing very well. And let's switch to gold. You can see here is a look at the upward movement. All the moving averages, take a look. They're all in the correct order, giving you a well-defined trend. This is the daily chart, 4-hour chart, okay? And what you want to do is you want to look for a buying opportunity. Once price goes higher, it's probably going to go much higher. And let me just, there you go. We want to wait on the, yeah, okay. So you can see this, the weekly candle right there. Weekly candle was a bullish engulfing, closed above the 200, but it's going to go, there's a lot of room to the upside, most likely to this previous swing high. Take a look here where my mouse is. So, I mean, any of these areas. So there's room for the upside on the silver, and you do always want to wait for retracements and then basically buy the dips and wait for price to go higher. And then gold is on a tear as well. Take a look at this daily bullish engulfing candle. So again, the moving averages are all in the correct order. You can see that right here. So another great pair to look at. Don't discount them. If you've never tried trading them, why don't you put in a small order and see how it works? Okay, so that's it for this week. Take care, everyone. Have a good long weekend up here in Canada, and we'll talk to you again soon. If you have any questions, feel free to email me anytime. Take care. Talk to you again soon. Bye for now.